listen-only mode.
Good morning, everybody, and welcome to a special Fed Thursday edition of the VLSI Live Action Intraday Market webinar. Maybe it's not that much of a special edition because Thursday is generally when we do these webinars, although I think we have had some variation, like I think we did one last Friday. But in any case, we'll dispense with the chit-chat and just go right down to the heart of the matter, which is that we are 1 hour away from the Fed policy announcement. And I guess the crowd expectation, Dr. K, would you say the crowd expectation is that the Fed is going to implement QE3?
Well, I go by price volume action of leading stocks and major indices, and that what those are all telegraphing is we're in an uptrend. And since we're in an uptrend, I think the market's optimistic that the Fed will come in and say something that's pleasing. However, even if the Fed does not give the market exactly what it wants in terms of saying, yes, here we go, we're going to start with the QE on this date, that doesn't mean the market's going to sell off. Because knowing Bernanke, if he doesn't say it that way, he's going to say it in a way that's not going to cause serious market disruption. He's going to be very measured with his words. He'll probably say something along the lines of, you know, he's with the ECB and the Fed, and essentially when the time is needed, you know, the Fed is going to roll out QE3, essentially giving a distant promise on QE3 if he doesn't give an immediate one.
Yeah, I would tend to agree with that scenario. I mean, it looks like the market has to know that, and it's probably weighed the odds of them making some outright announcement versus them maintaining this willingness to act, which I think keeps the bid in the market. The other thing we also have to think about is whether the market at some point starts to discount the election. And I know that right now polls are showing Obama getting a bounce from the DNC, the Democratic National Convention, a week or so ago, which is normal, but we're going to have to see what the debates bring in October and how things progress. So it will be interesting to see generally how the market reacts to this, but all you can go on right now, you can't really predict what's going to happen. And even if you could predict what the Fed is going to say in their precise language, I don't think you can predict how the market's going to react. So that just brings you back to the essential problem of figuring out what your stocks are doing and acting on that basis. You can see the NASDAQ is holding above this 3,100 level here on the pullbacks. It's above the 10-day moving average and this breakout level. So the breakout's still intact, even though you haven't seen the market get any real thrust beyond that. But then you might not expect it to, given the fact that we have this question of the Fed policy meeting today. So there is some caution in the markets over the last few days, particularly this week, really, where we've pulled back and gone sideways on the NASDAQ. But you can see the S&P, on the other hand, has been able to rally all 3 days this week, and I think most of that is because of stuff stocks in the S&P that are doing better. I've seen some oils look alive. We don't really care much for oils in general because they tend to be erratic, and OII is one that had a pocket pivot. Oceaneering International, I think it's a gas oil services company for offshore drilling, but you can kind of figure that out from the name Ocean Earring. But anyways, you've got a pocket pivot right here, so you know it's moving up. You got a little breakout here, interesting weekly pattern, a cup with handle trying to come out. That looks interesting. But you've seen stocks like that do well. You've seen fertilizers do okay. Agrium, Consolidated, or CF Industries showed a pocket pivot yesterday, but it's just in this little mini cup with handle on the daily chart. Excuse me, getting a little allergy attack there. In any case, so you're seeing that. I think that's one of the reasons why the S&P is doing a little better than the NASDAQ right now, and you've seen some tech stocks come off because of Intel's announcement last week, and of course that was the day that Mellanox got clocked. And essentially, you know, we had some of this, and we just blew it out here, and we'll figure this out later. You're holding the 50-day moving average for now, but you might watch for some kind of a pocket pivot type move off the 50-day or something. But Dr. K, what's your take on this? You stay away from this, or do you think one could actually nibble on this at the 50-day moving average?
Well, you have to know your downside risk if you're going to nibble, and the downside risk, you could say, is a break below that low, which is 94.81. So if you use that as your ultimate selling point, because I certainly wouldn't use a violation of the 50-day in this case, because you don't know how far down it's going to go under the 50 before it violates it. But 94.81, that's about 95, and it's trading at 101, so that's about a 6% risk. And you know, if that's permissible to you, you can certainly be buying it here.
Yeah, I mean, you could even run it tighter. The way I would maybe try and do this as a trade myself, I'm just speaking for myself, because as you all know, I like to be very aggressive when I do make a decision to do something, and I'll keep a tight stop. One way is just to look at either this low here and just keep it right along the 50-day. Just don't even mess around with it, and see if you get some sort of a bounce. But that's a lot of volume on the selling, and a little bit disconcerting there, and you have to be careful. And I think if you already were buying on the basis of some of these pocket pivots, you had to be out either partially here and all here, or all here, or whatever, or even all here, based on the violation of this low here, which is this close under the 10-day. So in any case, I think one should probably be out of the stock, but you know, we're looking at it right here, and the volume drawing up on the sell side, stock's holding tight above the 50-day moving average. It does bring into play a potential trade, which could carry, you know, 10% from here. And I think in this market, if you're able to get a 10% move in a stock and you're able to play an aggressive position, a lot of times what I'll do is just take some off the table. And I'd use as an example, say, LinkedIn. You know, we were buying it in here, and we had a pretty good position in here, and as it started to launch, and it runs up in here, you could sell some into that move and then hang out with a core position maybe a little more given the cushion that you have here. But that kind of move is pretty nice, and this may need to go sideways for a while. It's acting okay today, holding above the 120 level. I think LinkedIn, it's got a little bit of overhead from this side of the pattern. It's kind of a funky cup with handle, I suppose, but you have this the IPO day where I think you hit 122.70 something on the high there. What was that actually? 122.70 roughly. So you've got some overhead there that's coming into to play.
Also on Mellanox, now normally when you see a stock gap down, you don't want to touch it with a 10-foot pole. I mean, you want to sell it. And in this case, yes, you should have sold Mellanox either at the 10-day at the 10-day violation, really.
Here. Yeah.
And the thing is that where it's at now, knowing why the stock did what it did is important. You had a one-off where the CFO retired, and the stock sold off. You also, the day before, you had a downgrade in the stock, and I think there was trouble with Intel. So you had a confluence of events that caused this kind of action. And leading stocks, as they move higher and higher, they often will not give one a smooth ride, and things like this do happen. And what I like is that on the gap down day, the stock closed in the top half of its range on massive volume, showing that there's a lot of institutional support in the stock. And now it's getting tight and constructive as it's right around the 50-day. So, you have to analyze the pattern in that manner, and then decide for yourself if you want to take a 6% risk by buying it here.
Yeah. So do you, Dr. K?
I wouldn't be opposed. I mean, if I already had my portfolio, but if I was sitting in nothing, I might take a small position in this, because a 6% risk to me in a stock that has had this kind of price momentum is permissible.
Right. Okay. Someone says they're having some trouble hearing our voices. I guess they're fading in and out. Usually that's a function of the listener's internet connection and speed. So this thing runs here. We're running at pretty much blasting commercial internet speeds here. So I wouldn't imagine that we're all that slow. So, but the internet is what it is, and it does depend on your internet speed on the other end as well. So, anyways, some other stocks that we're keeping an eye on here that, of course, get everybody's attention. Coors is announced a 20 million share offering. It was real nice to have Mellanox break and Coors come off the same day. But the reality here is you get this gap down. It's holding along the 20-day moving average. Maybe not that relevant for Coors because it's way up there. You could see the 50-day as your ultimate level of support, but also the top of this base, which is around 50, I believe 50.69. Let me see if I can scrunch this down a bit. And you can see here the top of the base here, so you might look for a pullback there if that occurred. But so far I don't really see any interested sellers, so I think the stock is fine. I think if it pulled back into the top of that base in here somewhere, it'd probably become viable on that basis. So another stock that we've been watching that has pulled back but which they seem to act okay. It's broke out here. It was Regeneron Pharmaceuticals, and it runs up here. You had some pocket pivots, I believe, in here on the 10-day moving average, a couple in here, and it did move higher. But then yesterday they were presenting at some, I think it was a Morgan Stanley conference, and the stock came in, bounced off the top of the prior base, got support there because you did close mid-range, and you're moving up a little bit today. But it may come back and retest, but I think you have to keep in mind that it's very normal for stocks to have at least one pullback to the breakout point, and usually the first pullback to the breakout point is another chance to buy the stock. And if you want to do it, you have to step up here. I think your risk is pretty much the breakout level. I would expect that this would have to hold. So anything I buy, speaking for myself, anything I buy on the basis of this breakout would be dumped if it was not able to hold the breakout point. On the other hand, we did buy some in here. There's a pocket pivot here and a couple of pocket pivots in here. One could, if you own some shares in this area, one could hold those shares, seeing whether the stock holds the 50-day moving average, although it doesn't really show a tendency to hold the 50-day moving average. But that's just one way to handle it. I don't really see this pullback as all that abnormal. So Ulta Salons and Cosmetics I think is interesting because you do get a couple of percent porosity below the low, the intraday low of the Bible gap up day, which is 5 days ago. And I think that's probably normal. Notice how it comes down to the pink line, the 10-day moving average. So it's probably okay. Dr. K, you have a take on this one?
Yeah, I mean, it's a retailer. It's going to be a little choppy. It's had gap ups before, and in this case, it's pulling back in a market that's resilient. So I'm a little bit cautious. I mean, right now, let's see, it's trading. It went all the way down to 97.30, and its low was 99.26. So, in context of the pattern, you could still be sitting on this, but if it goes much below today's low, I would be out of the position because it really has violated the gap up.
Yeah, and that's pretty much your 2 to 3% porosity, wouldn't you say, Dr. K?
Yeah, exactly. And of course, that 2 to 3%, it's in context with the pattern always. So if you have a massive Bible gap up, that is Bible, you might want to give, and the stock has a high relative strength, you might want to give that stock more than 3% in some cases. I think there was Mellanox that went back, it retraced 3.1%, but it was entitled to.
Yeah.
Yeah,
so
that's right.
But notice it only came off for a couple of days, found support rather quickly. The one thing I hate about Ulta Salons is that it's taken, you're in the fourth thing now of a pullback. Now it's actually moving to the upside, so it is finally getting some support. But I would think that if you were going to take some shares, you could approach this both with the price stop but also a time stop, in that I would expect it to bounce up at least off these lows and back up into this range up here, up above or around 100, pretty quickly within a couple of days. So you could also put a time stop on it. But right now the stock is basically running down a couple of cents and is acting okay. Amazon's another one that we've liked, and it's had a nice move up, pocket pivot right here, and holding tight, so there's nothing abnormal there. Rax, which is a stock that confounds me because of the weekly pattern. This, to me, you're not seeing a lot of big volume weeks coming up, but it just holds in there very tightly. And it had a downgrade the other day, and the stock just hung in there, and I was pretty impressed with that. It doesn't seem to want to give way, but at this point, stock's way up off the lows of this base. I would expect that it has to form a base in here. But that's been one stock that has done pretty well. Another one we're keeping an eye on here is SolarWinds. You had the breakout, which is also a pocket pivot, and that was easy to pick off early in the day. It's a thinner stock, so it's not as easy to get a big position in. But still, it had a nice pocket pivot that morning. The volume was already running up. But now you've pulled back into the 10-day moving average. If you figure the top of this is 55.85, 56, say, so 55.85, 56, somewhere in there on a pullback, that should hold. But given that you are about, you're not quite within 5% of the breakout, so you're pretty close. But I would look for some kind of pocket pivot off the 10-day moving average. Facebook, I think, is pretty interesting. And I have to confess to having bought this move here on this Bible gap. But I've been watching Facebook for a while, and I could see this one coming almost because so many people are negative on the stock. Every commentator on TV seems to be talking about where the thing is going to bottom, $12, $9, and everybody's got their downside price target. But if everybody's leaning one way and you don't run into any more sellers, which it looks like here, because on this low here you had some lighter volume than you had here, and then it kind of dried up right in here. you could get this thing running up to the 50-day moving average. And who knows, maybe it's the biggest, ugliest double bottom you'll ever see and it goes higher. I don't know, but I think this is a trade. So, I'll try it, and I think the low here is 20.28. That kind of gives you about 3% on the downside. Less than that, which is more than acceptable risk to me. But my guess is if this is going to work, it's going to hold tight and then move higher pretty quickly. So I think that's interesting. But I think also if you see some strength in Facebook, you're going to see LinkedIn probably move higher. So we're still sitting on that as well. Onyx Pharmaceuticals, we actually have a question on that too, I see coming through. You had a pocket pivot in here. Let's see, where was that? Right here? No. Where am I? Right here. There's a very subtle pocket pivot. You move up, you run up to the top of the base, and now you're pulling back. If you look at this on a weekly chart, it's just a cup with a one-week handle. So that looks normal. Do you buy up on the pullback to the 10-day? I suppose you could. It looks pretty normal. It looks pretty benign right now. I think we're running on slightly lower volume today. Let me check that. Yeah, 77% below average. So it really is pulling in nicely. So it should. I think it should hold in here on a pullback if this thing is any good. They also presented yesterday at the biotech conference that we saw Regeneron presenting at yesterday, and so they held in tight. Things are going along for them with their new drug, and they're focusing on that. Let's see, silver and gold. I kind of see this. That's not a pocket pivot, but that is supporting action off the 10-day, and I guess for these things, when they get to be high velocity, that is what you want to see. But you're down a little bit. People wondering, is there going to be QE or no QE? I would think that, well, I guess we'll see what happens when the Fed makes their announcements. But again, as Dr. K said, as long as the Fed leaves more QE open, then the market's definitely not going to sell off, and it'd be hard to say whether you're going to see this sell off or not. If it did, I guess, Dr. K, how would you handle this for now?
Yeah, I am sitting in my position.
Right.
There's nothing. It's not doing anything wrong, and it'd be nice to see it consolidate here because it's made such a big move in such a short time, and that would allow for an additional entry point into the ETF.
So would you be looking for a pocket pivot or something off of here and something better than that?
In the ensuing days, I'd like to add to the position. Of course, we don't need to have, based on the way we're trading this, if it consolidates its gains and then starts to move higher, then I would say let's implement the buying strategy of buying every X% higher, since it now has really consolidated, and that's what I'm looking for, either or, so that we can increase our position size.
Right, and another thing to keep in mind is that if the metals have a real move in here, then it's probably heading back towards the old highs, and so you've got probably more in it than this, and it's really just starting its move. So there's no reason to get impatient here and think you have to be loaded up to your eyeballs on this. Just play it as it comes, and be pretty steady. So I thought yesterday, using the pullback here I actually sold some shares up higher and then bought them back as they pulled back at a lower price. But I was kind of looking for a pullback to the 10-day to do that, and using the AGQ, for example, is very volatile. So, but fortunately, that kind of worked out and created a little more profitability in the overall position. But we'll see how this goes from here, because really the big move is yet to come, in my view, and I think that's whether we head higher towards 42. Let's take a look at this. In fact, you're way down in the pattern, so you just barely come through this trend line here, however you want to draw it, and you could see maybe a pullback into it. But I would think that this means you're turning, and you're going to see something more significant. You get 1, 2, 3 big waves to the downside. I would just count this as one big wave, and so you're in a position to turn. So if there is a move here, it's really kind of in its nascent stages, and I wouldn't get too impatient and just work I'd be working a position size with a cushion under it that allows you some flexibility without getting yourself your head in a ringer here. So let's see. I got some other stocks. Oh, Expedia's got the pocket pivot. It's acting okay. I would think that we talked about this last week. Get rid of that. With Priceline trying to come up, and it had this pocket pivot type thing. It's holding above the 200-day, but this is the moment of truth for it as the 50-day comes down onto the 200-day. But this is acting a little bit better. Trip, on the other hand, Trip Advisor looks kind of doggy here, and it's not really. I don't know if I'd try and short this. It's sitting on top of this area here, but it would probably have to break down on some volume. But it may be trying to rebuild here. So my point here is that this may overall create a case for Expedia coming up off the 10-day moving average. Did I get rid of my, hold on a sec, let me reload. Whoop. I'm going to reload my page because it looks like I got rid of my weekly chart there. So here we go. Yeah, so you can see on the weekly chart, you're just 1, 2, 3, 4, 5, 6 weeks rounding off the 10-week line. So if you like Expedia, that's probably viable. Not the fastest stock in the world, I suppose. Well, on this gap up, it ran up a little bit and then really didn't go anywhere. Let's see. Of the stocks that are moving today, let's look. Equix was, big gap up now. It's kind of coming in. It gapped up around 210, opened up there, and it's coming in pretty fast. They decided to convert to REIT status. So what's your take on this, Dr. K? That's a viable gap up?
Yeah, the stock's been looking good all the way through, and now they made a major news announcement that's favorable. So, and it looks like it gapped up at the top there around 210, and then it sold off. So we had a question earlier about how do you handle that kind of position? Well, some people are going to buy maybe half a position at the open, knowing that it could retrace. Some people might not buy it at all and wait to pick up the shares cheaper once it finds its level. It looks like it's pretty much trying to find its level here. So it might be a safe buy. And then, of course, you could keep a real tight stop on it because some of these viable gap ups, if they close their gap, you want to be probably out of the stock. But this one looks all right. And based on the sheer amount of volume that's come into it today, looks like it's finding its floor. The other way to play these is to not buy them at all on the viable gap up day, but wait for a pullback in ensuing days closer to the low of the viable gap up day. Then you know your risk, and then you can make your decision.
Yeah, and you're looking at 199 as today's intraday low. So I think this reminds me of Ulta the other day. At least your risk is 1% from here if you want to use the low as your stop. But like Dr. K said, it looks like it's trying to find its feet here. Let's see. Z, I think, is an interesting situation. There has been a big increase in mutual fund sponsorship. And if you look at the stock, it's a little bit squirrely, but it's a lot like LinkedIn in the sense that it had this big IPO day. And since then, it's been building this big ugly pattern, and more recently, right along with LinkedIn. In fact, if I bring up LinkedIn's weekly chart, you can see this pattern here looks a little bit like Z's kind of pattern here, although Z is more of a wide and loose sort of cup with handle formation with a deep cup, and it's just typical of the stock. So if you understand how it trades, it's generally bought best on weakness. You have it pulling down into the 50-day here after they priced a secondary. I think it was priced at $43. It was only like 1,000,004 shares, I think. This stock has a really small float too. 10 million shares I'm showing here on my system, and I think it is a 1.4 million share offering. But it's interesting. I think eventually it's going to go somewhere, but I'd really like to see it act a little more coherently and tighten up. But I do think it's something to keep an eye on. And interesting story, an interesting stock. But notice it is moving up today, and it's one of the better movers on my list here. Aptometrics is amazing. It had a breakout here and just continues to go higher on no volume. So that's just up. This Kihu, it's Kihu 360 technology. Had a pocket pivot right here. Very thin stock, well, not thin rather, but an unmarginable stock. So in terms of it being a Chinese stock, American U.S. brokerages don't allow you to margin the stock. I wonder what that means. But in any case, you notice you have pocket pivot, it's hanging in there, but it's coming way off the lows of this pattern. So we get a lot of questions about that. NetSuite moving higher after yesterday's pocket pivot, which I think was also a... was that a breakout yesterday, Dr. K? Yeah, it was. Here we go.
Yeah, that's a breakout. So it's nice because when you have these pocket pivots within the base, they give you that subtle clue, and then the next day it breaks out, you're in the money by quite a bit.
Yeah, I think you have one in here. There's a couple little ones in here. And then, boom, it's gone. It's kind of thin stock, but we haven't liked it because of this maneuver, and that was the day that Knight screwed things up. I would really have to own a stock, doing that on any particular day. Hopefully I'd be in the bathroom while it happens and not see it. But that is a little bit unnerving, but we know why, and it just seems to be a sign of the times. Um,
Yeah, and that said, we still did put out a report on, well, 2 days ago. So anyone who got into it 2 days ago, yeah, I mean, knowing that it is a squirrely stock, though, so do keep your stops, be aware that the stock could have another spin out. So in some cases, it's good to have your alerts on so that if that happens, you can take action immediately.
I haven't really mentioned Apple, but Apple's one of the better performing stocks today. It's up a little over 1% today. It had a pocket pivot yesterday. That's kind of in a funky position, but stock's moving up again today, so we'll see if it gets through the highs. But that's what it looks like on a weekly chart. So getting support on this pullback isn't even close to coming down to the 10-week moving average. So Apple continues to act pretty well along with Amazon. So what I want to do now is get to some questions and see what's on people's minds. A couple of questions coming in. We talked about Onyx. Davita is one. That's just a pullback to a breakout point. We haven't liked this stock. Haven't really thought much of it. It's in the healthcare area, so some of those stocks have been a little bit squirrely. And just have a pullback to the buy point. I can't really tell you anything outside of that. Can you, Dr. K? No. Fire is just hanging out along the 10-day. Maybe it's building a handle here. So you look on the weekly chart. Looks like it needs to build a handle. That's about all I can see there. FLT Fleet Core. We talked about this pocket pivot, which is also a breakout, holding the 10-day moving average on the pullback. If you like the pocket pivot, I guess on this pullback light volume, that's where you might pick up some shares. I don't really see anything outside of that. And it's coming. It's a little soft with the market here, which I think is normal. IACI Interactive Corp. This thing had a big. I guess this is a buyable gap up of sorts, but it's it's Interactive Corp. It's slow. Here's what it looks like on the weekly chart. It's just chopping sideways. To me, I don't really care for this stock. It never has really done anything. I don't see why it suddenly is going to. It's widely owned already by institutions, and I don't really see where you get the impetus when you have institutions moving into a stock. Fleet Core, we talked about that one already. Let's see, what is your take on GNC? GNC Holdings, a vitamin stock. I don't really care for this. It's very erratic and junky. Even the weekly chart, I don't know what this thing's trying to do. No real tightness in the base. Maybe this is where it gets tight, and not anything I'm looking to buy. You got any comments on that, Dr. K?
No, I don't like it at all. I mean, it's too erratic, and it's got even that little mini gap down in the pattern, so I wouldn't touch it.
Cytec, some of the chemicals have done okay, but again, they're kind of erratic. You had a pocket pivot in Cytec Industries. Dr. K and I were looking at a couple of these a couple of weeks ago when we saw these pocket pivots, but we decided to just pass on them. There's really nothing that exciting going on here, and really not the best earnings on the planet. So let's see, taking a look here. Well, last quarter up 143%. Next quarter down 36%. Sales up 6. I don't know. I don't think doesn't strike me as all that exciting. DHI, I think it's DR Horton. I mean, the builders are okay, but I think they're kind of blah. They get a little bit of upside movement. No real big moves here. They've been chopping their way higher. I don't really see anything major here. So, it's okay. It's acting okay if you own them. I think it's fine, but it doesn't really thrill us. Cheater, I love that. Charter Communications. You had a pocket pivot in here, and stock's holding the pocket pivot and trying to break out and hold up here. Churned around here, closes in about a little bit under mid-range, it looks like, but just hanging tight. Remember, there are some big volume selling in here, so it's not the greatest name on the planet, but it's acting okay. Nice and tight on the weekly chart here on this base and breaking out, and it's holding. So it's in a viable position there, obviously. CMG is a short. Well, we talked about that one yesterday, and I think that, let's see, this chart can come up any day. Oh, that's me what's happening here. Here we go. Finally. What's up with these signal? Uh, we look at this as a short. You're coming up into this falling window or this gap down thing, and you're kind of wedging up. So overall, the macro pattern is that you get this big ugly head thing now. Left shoulders here, and I would think it might come up to the top of this level here, and it might become shortable here. So keeping an eye on that. You can throw out 1,000 shares short here or something and see if it rolls over if the Fed says something. But that's a weak stock, and I would look at it potentially as this being a big right shoulder in the pattern. I mean, you could say that to me this is more of a late-stage failed base because I don't see, if this is a head and shoulders, 1 week up it's like a weird pinhead with pinned shoulders, 1 week up here and down, 1 week up and then down. So, I don't know if this is your little short head and shoulders, but I would tend to look at this as potentially, if you look at the stock this way, okay, so now you see more price history. You can see you might look at this as a big head, and these are some left shoulders, and this is a right shoulder, and you're going to run up to the top here. Generally what happens is the right shoulder should not go higher than the left shoulder, so what I would look for is resistance somewhere in this area between 340, 350. For now, if I was running a short position on this, I would be using the highs here as just a quick stop, and I think that makes sense. Stock could go higher, but it looks like it's wedging up a little bit and could eat it at any time. SSYS, there's a pocket pivot in SSYS, and there's no follow-through to it. The one thing here is this is a little bit of a downtrend, so I may need to correct that and pull out. Dr. K, you have any comments here?
Yeah, well, these are pretty DDD and SSYS. They're in the same area, and SSYS tends to be the choppier of the two. So, with pocket pivots and choppy stocks, expect there to be some retracement. And that said, given the pattern of SSYS and the nature of their business, I think the odds favor this stock moving higher off the 50-day in days ahead, if the market is going to hold up. But know that it's a choppy stock. So any position you buy, it's going to whip around a bit. It's the nature of its pattern.
Cerner. I was looking at Cerner as a short yesterday. I think I don't know what's going on with eSignal now. All of a sudden, it's taken like 5 years for my charts to come up. So we'll just give it a few days here. But Cerner, I was looking at as a short. If you look at the pattern, and hopefully this will come up someday, but I'm going to maybe shut this guy down. I'm just trying to get a chart to come up. Here we go. Maybe now it'll work. There we go. Now we're starting to go up. Maybe it was the Bloomberg is doing it. I don't know. But Cerner, you could look at, here's a left shoulder ahead, and you're working on a right shoulder here. So, yeah, I think this is a possible short. It's moving above the 200-day, so just watching here. Potentially, if you wanted to hit it. I was looking at it yesterday. I would rather hit it on a rally coming up to maybe 74 and just above the 200-day just to fake everybody out and come up to this area right here. But I suppose it could be shortable in here if the market rolls over. So you want to have some of these on your, on your cheat sheet or whatever. I don't know if you look at this left shoulder head or left shoulder head, right shoulder. I don't know if it really matters, but yeah, it is pretty weak along the 200-day moving average. Another one that I've been looking at that looks pretty weak is HealthNet, and now you bring this up, and that's pretty ugly. Left shoulder, big ugly head. It looks like it wants to roll over, and in fact, it is rolling over. So I should have put that out a couple of days ago, but a little bit slow there. Plus, it seems like the market wants to move higher than lower, at least right now. But I've watched this one too. This one looks like it's rolling over, but that's a real ugly-looking pattern on the weekly chart. So let's see. SSYS action seems constructive. What is a fail-safe on the MDM, Dr. K?
Let me see here. Pull up the spreadsheets. So we've got the signal was on the 14th at 3032.98 on the NASDAQ. So 3032, that's essentially the fail-safe is designed to keep the risk to within 1.5% of that signal. So 3032 times 0.985, that we're talking, it's pretty far down. It's 2986. The market's rallied since the signal. So in other words, the model's going to switch signals before that fail-safe kicks in, just because there's, now we're looking at enough of a profit cushion.
Right.
And that's not always the case, but I would say based on the nature of the model, when it does switch signals, it's not going to be because it will not be due to the fail-safe being triggered.
Right. So you're a long ways from that. And really, it looks to me like it's roughly the top of this area where the market broke out of this range it was caught in through most of July and has continued higher. So you're a ways up. So that's been a decent buy signal over the last few weeks, actually. So it looks like our model is doing just great, Dr. K.
It's about this market. I mean, if someone says what's the toughest year, definitely 2012, because the sawtooth formation is just perfect to whip the model in and out. And I've gone back through decades and decades of these index patterns, and you're hard pressed to see this kind of weird sawtooth formation. Usually, if you get a lot of slop and noise in the pattern, you see something more like 2011. And I'd also add that 1999, second and third quarter, that is also a very isolated type of pattern that trades through, and that caused a lot of problems for the model. And the thing is that these types of formations are one-offs. I've not seen them occur in the past, and hopefully we won't see these kind of things occur in the future. If we do, then the model's going to have a drawdown, but that's the nature of the model. And fortunately, these types of patterns don't exist very much. So it really relies on the nature of the trends.
You like this gap up in Paul Corporation?
Let's take a look. Well, I don't like a number of things about this company. I don't like the fundamentals. I'm not into this company. No, I wouldn't buy this. It's not viable gap up.
Okay. I mean, technically it has featured, but the stock just isn't enough of a leader in our view. So TRN isn't Trinity? Isn't that Trinity? Yeah. So the rails have been trying to act better. So you get Union Pacific on the daily chart heading up to highs. You can see on the weekly down here, it's just in a base. But TRN is in a lower position, so don't really care for this. It's not really in a good position here to be buying, we don't think. Fusion IO is trying to build a little base here, so it's just hanging out. I still am not sure. I'm convinced that this is really a stock to be buying when you have negative 40% earnings growth, and then next quarter negative 52% earnings growth. That's really not the direction you want to be going in. So I think there are better names fundamentally to be dealing with, but technically it's holding in a tight little flag. So if you're just trading on technicals, you can watch that, I suppose. No real pocket pivots in the pattern yet, so that's really all. I'm not really something I'm interested in playing. Nation Star Mortgage, my feeling has been that this thing has had a big run up. Here's the weekly charts. You can see the big run up here, and it needs to build some kind of a base. It's just gotten too obvious, and it's taken some time along here. It got hit with some volume off the peak, but you did have this pocket pivot move here, another pocket pivot here, and it's just hanging in real tight and trying to go sideways. So it's, as Dr. K said, it's doing everything it should, but it may need some time. And I would tend to think, if you're asking for my so useful opinion, like it needs more time and probably needs a base. It just seems a little too obvious that it would just run out of here. But, maybe it does. What do I know? So if you own it lower, there's no real reason to be selling, I would have to say. Right, Dr. K?
Yep, sounds about right to me.
So I think this is a pretty funny question. Don't forget to talk about CMG and the short sale in an uptrend market. My view is that at any point in time, if you see setups in former leading stocks, they should definitely be on your short sale watch list. And so we send out short sale setup alerts to let you know when we think we see a setup. You can keep it on your list. It doesn't necessarily mean it has to be actionable. And the way I would look at it, let's say for some reason the market doesn't like the Fed's announcement today and you see it get hit on heavy volume off the peak and it breaks, what are you going to do besides cut back on some of your longs or get off margin or whatever? If you're looking for short sale targets, I think you need to be looking at stocks that are, in fact, setting up. So far what have we looked at today? We've looked at CMG. I think the Cerner, somebody asked about that one. So interesting, we're on the same wavelength with that. And Cerner on a weekly is kind of, this head and shoulders type pattern. And so you want to have a couple of these in your back pocket. Another one I've been looking at is NetEase as well. You can see on a weekly chart, this is pretty ugly, head and shoulders, breaking down. I would like to short a rally up into this area on NetEase, though. But these are some stocks that are showing the proverbial short sale setup. Head and shoulders, late stage failed base, whatever you want to call them, whatever you want to label them. They're there, so that's why we talk about it. It's not in market in an uptrend. That's not really like I said, I'm not inclined to be shorting if the market's still in an uptrend, but I do always want to have a couple, 3 ideas in my back pocket in case the market blows chunks. Ellie Mae is like another NSM. I believe they're in the mortgage area, but let's see. No, I take that back. But what do I know? Talk about judging something, a book by its cover. This is actually computer software, financial, electronic mortgage origination services. So that's basically what it is. And so it's similar to NSM, 213% earnings growth in 2012. So that's in a nice, tight little base here. And looking like it would need to exceed the volume on this day, which is a whopping 768,149 shares to be a pocket pivot. So you might watch for that. It's a nice little base, and that's in a better position than, say, NSM. But it looks like similar businesses, and so this is also moving. But that's a nice little pen. I think it's a thin little stock, though. What does it trade? 552,000. Yeah, just barely in my realm. You like that, Dr. K?
Well, it is thin. It's a $700 million company, and what's the daily dollar volume is it's only about 12 million. So it's on the thin side. But I like the stock. I mean, the momentum's great. The story's good. But it is thin. So
watch this, though. I think it looks interesting.
And the earnings and sales are also they're really they're explosive, upside explosive. So yeah, I mean, again, it's just going to be a volatile name, and it's thin. So trade it carefully.
Cooper Industries is a viable gap up. Here, I suppose the only thing is you got a 14% earnings growth or 10% last quarter, so it doesn't have the fundamentals that we would look for. Not a big leading stock, but it's continuing to make highs and it acts okay. So if you like it, if you think there's a story here, then I think you could possibly buy it on the basis of holding this low here, which I guess is 91.54 in the viable gap up. If you think that's going to work, but maybe that's a little better than I don't know. How about you, Dr. K? You like that?
I don't like the fundamentals enough. I mean, it's not a bad stock, but it's not a leading stock.
Yeah. Somebody says, when to look at a weekly chart versus a daily? I'm always a bit unsure. Does it build confidence for you? I would say, I'll let Dr. K answer this after me, but the weeklies tell you what's going on a macro scale, and Bill O'Neill once told me that if he was stuck on a desert island and could only have one type of chart, he would pick the weekly chart because the weekly chart shows you the patterns of institutional accumulation, whereas the daily chart shows you more noise. So what we like to do, or what I like to do, is you look at a daily and you can see the context of the action within a daily chart and as well as a weekly. And sometimes if you got a pullback occurring on the daily chart, you can look at the weekly and see that really in the context of the weekly chart, it's pretty normal. So anyways, I'm seeing AGQ selling off right now. So I guess coming into the Fed meeting in 15 minutes, getting a little bit nervous there. SPLK, you didn't like this stock as Ross Haber. And that was okay. I mean, I thought this could have been a viable gap up, but it's trying to break out and form a little handle. Maybe it goes sideways. I do think it's acting okay, but it's sort of a story, that's on the come, and they're losing money, but it's basically the Google for business, and been holding up very well recently along the above the 10-day moving average following this gap up. So I mean that looks okay. What's your take on that one, Dr. K?
Yeah, I mean it's an IPO, and so it's going to be more volatile than normal stock. But I mean it's not earning anything. That it's really a play on the story behind what the company does, and allows companies to do Google-like searches across their network. So it's a very good story. I think a lot of companies could utilize this technology to their advantage. It makes things more efficient. So I like the story, but yeah, and the Bible, this gap up, I mean, you could say it was viable, but again, it's an IPO and there's no earnings. So I'd be if I were to buy this stock, I'd buy a limited position, very limited position in it.
I'm looking at some other stocks. Have we ever seen the NYC short interest this high before? I don't recall seeing it this high before myself. So maybe somebody knows something. I don't know. Let's see. I'm going to run through some other stocks here. Alexion, they're just pulling back. There's really nothing here to... I think this is a pocket pivot on the breakout, just pulling back to the... So it's hanging in okay. That's what it looks like on a weekly chart. And that looks okay. Trying to come out of the 6-week, 7-week base now, so nothing really wrong there. Now somebody's asking about, I don't know, I don't care if this stock is just too thin. ServiceNow trades about 287,000 shares a day, so it's just too thin for me. And I don't see any pocket pivots in the pattern anywhere, any buy points recently.
Yeah, and the earnings it's still, they were in positive and now they're negative, so fundamentally it's not the best.
Concur Technologies is just moving up along the 10-day moving average. You did not have, let's see, this is a pocket pivot right here. So you had a pocket pivot buy point right there. It's still within range of that, so it looks like it's okay. So it's acting all right. I think this is another stock that is really thin as well, and this thing trades all of well, it's not that thin, 509,000, but just barely at the cusp right there. So I don't know. A little bit thin, but it's acting okay, and you had a pocket pivot right there. Lulu is trying to build a little handle here, so you've moved up, and so now you've got is this big cup. So you would think that you would have to build a handle here, so that's really all I'd be watching for. If it does and sets up again and breaks out, maybe it's good to go. You know, with Coors acting okay, hanging around 53 bucks. You know, that group could do well, and Lulu could also continue higher. So I think it needs to build a handle for now. Hain is another one. I don't know. This one never gets me excited. Hain Celestial Group. Bible gap up. All you could do is buy it using the low of this as your stop. 60. Let's see. What is that low there? 64.86. You got any thoughts on this one, Dr. K, other than the fact that it's just a Bible gap up? You'd be using that low as your selling guide, and that's about it.
Yeah, it's you know, the fundamentals are pretty good on this one, and you know, the earnings 34% in the latest quarter. Looks like institutional sponsorship has risen consistently over the last 6 quarters. That's good. Yeah, I mean, and you know what your risk is. Your risk is the low
Right.
of the Bible gap up day.
All right, let's keep going here. We're going to get some more questions answered because I do want to sign off.
Yeah, we should do a 5-minute before the 5:25.
Yeah, in 5 minutes. eBay, you have this pocket pivot right here, and it's just holding on the pullback. You know, I don't really see anything wrong with it, so it's fine. Somebody says S or T. What is S? Sprint. Not a real big fan of it. Kind of a big ugly cup, and it's a $5 stock. Telephone, we just don't deal with that. We leave that one for the grandmothers. It's acting okay, but that doesn't really get us excited. Does it get you excited, Dr. K?
No.
No. Bunny, BNNY. I like that one. Annie's. I mean, this is kind of interesting. It's a really choppy stock. You know, this one in Fran kind of reminds me of it. I don't know. It's in Annie's. It's the food company. I actually eat some of their foods. Good stuff, but it's really erratic.
Yeah, the earnings aren't impressive either.
Kind of reminds me of France. So we're not really interested in it. Panera, is this Bible? What do you think, Dr. It's just barely clearing the base, so I guess it's in a Bible position.
It's a legitimate breakout, and the basing pattern's good. It had a Bible gap up after the earnings report, so you know, and the fundamentals are all around pretty rock solid.
Yeah, so it looks okay. You know, not a big deal here. And I guess you could buy it using the usual stops. Somebody's asking the fresh market a short, and I would just say no because it only trades 134,000 shares a day, but it does look pretty ugly like the late stage failed base, but I don't know how late stage that is. I guess you could say it's late stage enough, but it's not. I would not short it simply because it does not trade enough. What about Goog on the long side, somebody asks. What about it? Nice pullback. Acts okay. I mean, it's come up, you know, out of this big pattern, so it's broken out, so it's acting okay. I think it's the slower of the stocks. I prefer to own Amazon or Apple myself if I want to own a big NASDAQ stock, but I think the fact that Google continues to act well, and it does, is a good sign for the market. Priceline, I don't think I'd short Priceline unless we got into a bona fide bear market. So, Priceline has shown a pocket pivot right here, coming up through the 200-day moving average. It's still holding, so I think the jury's still out. I don't know if I'm going to short it necessarily. So, let's see. Gil, we expect Apple to fill today's gap before it chugs higher. No, I don't expect things to necessarily fill gaps. And that's one of the reasons we like Bible gap ups, is because those are gaps that the stocks never fill. They just keep going higher. So no, I wouldn't be looking for it to fill the gap necessarily before chugging higher, and I wouldn't necessarily assume that it's going to chug higher, although it looks like it wants to go higher. But no, I don't operate on that basis. Do you, Dr. K?
Never, because there's really no statistical proof that any gaps need to be filled.
Yeah, Texas Capital Bank shares. Everybody always asks about this stock, but it's just a thin little bank stock, and it's trades about 403,000 shares a day, so not something that we really would bother with. But it continues to act well. And there's other financials. Goldman's been acting well. I think even Bank of America was running out, finally pulling back. Wells Fargo had a breakout, pulled back. UBS, or U.S. Bank rather, is another one I noticed was breaking out and acting well. So you're seeing some banks start to act not too badly. So we got 3 more minutes here. Let's run through CRM, Salesforce. It's acting okay. You had this big pocket pivot, comes back. I'm not really playing this one. I did sell shares up in here, and it pulled back in and started to look ugly, and now it's breaking out. It's still, got to form its base. I don't really care for the action necessarily. And American Eagle Outfitters, just a breakout, pretty simple breakout here. It just continues to chug higher, so not too much to say here. There's a little, that was not a pocket pivot, so. Have you tried MarketSmith's Chart Arcade? We don't use MarketSmith, we use Wanda. It's a lot better than MarketSmith. IPGP, just hanging along its 10-day moving average. But, nothing really, doesn't get us too excited. Do you look at the stock order book? No. Smith & Wesson. There's a gap up, so I guess if you like this one, the Bible gap up, I don't know. It's a $10 stock, not something I would really be interested in. But Bible gap up, it would have to hold that low of that day to remain valid, and that's about it. Any thoughts on Reagan rally for Romney? Any thought? You might have a Romney rally, but just watch the market. Who cares? We don't need to get into any mental masturbation about Romney rallies versus Reagan rallies and the timing of all and whatnot. Either it's going to happen or it's not. But what we would point out is that a change in leadership as a result of the November election could be constructive for the market, and that might cause it to rally. How do you react to possible market reaction after Fed announcement at all? Give it time to settle. Just follow your stocks and stops. So, Dr. K, let's have you answer that question.
Yeah, sure. When we've been through this cycle before, when the Fed comes out with an important announcement, the market tends to be pretty volatile. Sometimes it looks like it's cracking wide open, and then it finds its footing, and then goes a lot higher. It's unpredictable, so you just got to watch your stocks, obey your stops, and if you see any buying opportunities, and if the market's strong, and we're going to be running our screen, so if you see any new buys out there in the form of pocket pivots, we will apprise everyone, and then it's of course up to you how much of a position size to take.
Yeah, and if somebody wants us to stay on after the Fed announcement, but you know what? We don't have time to sit here like radio announcers doing play-by-play. We're traders. Don't forget that. We don't want to forget that either. I mean, it's nice to teach people about the market and talk about the market and go on TV and radio and all the fun things we do and write books. But when it comes right down to it, when people ask me what I do, I'm a trader, and so I got to be trading when this announcement comes out. So on that note, everybody, thanks for showing up today. Again, Dr. K just kind of gave you the scoop on how to handle this, and we'll see what happens. So good luck, everybody.
Take care. So long.